apologize, especially for Yanis and Deloitte, for not being in Hong Kong yesterday. It was what I call force majeure, right? Something that I had to do to take care of. Hopefully the presentation I sent at least mitigate a little bit of my absence there. As I told Yanis today, you're free to distribute that presentation. So that is nothing proprietary there. As a matter of fact, both what I would have said yesterday and what I'm going to say here today, it just skims the tip of the iceberg. It's a 20 minutes, 30 minutes talk just to introduce the audience to the issue, to the opportunity of impact investing. Of course, if any of you here or in the future want to know more, of course I have a lot more resources that I can provide to all of you. But the idea of impact investing, it's a big idea. Even though there's a lot of confusion out there in the world about what it is and what's not. Social investment is important these days. Not only from the philanthropic point of view, it's good to help the less privileged, but at the end of the day, we are business people, so we can have philanthropic organizations and use some of our more fortunate opportunities we had to help others. But also, there is a lot of opportunities injecting capital where capital is difficult to reach. Especially parts of the world where FDI, foreign direct investment, does not go. And does not go a lot because of lack of understanding of those markets, or because investors and advisors of investors feel that it's risky, and they are not incorrect on that assessment. But risk, as I talk about in project management and clients out there in the world, 4 years ago I was doing some consulting for the Venetia here, and we talk a lot about that. They were controlling the critical tasks, right? I said risk is just an event. It can be good or it can be bad. It all depends how you prepare for it. So investing in less fortunate markets, what I tend to call frontier market, yes, it can be pretty bad because they typically are not liquid. There is not much information on the market. And often it lacks governance, it lacks institutions, it lacks competitiveness. The entrepreneurs there tend not to be prepared for business, but ideas are still flourishing in those markets. There are lots of great opportunities out there, and if we understand these markets, we have an opportunity to capitalize on it. Of course, if you are an impact investor, you're not looking for the traditional investing return on investment on equity or on investment you made. You're probably looking into 4-5% return, and many investors think that, well, that's too little for the risk. It's too small. But in reality, you can have a small little piece of a big pie and be eating a lot more pie than having 30% of a small pie. So what is impact investing? I think we should start right there. The idea of impact investing, it's one that confuses a lot of people. A lot because people don't understand it. People tend to look at, if this graph, for example, they tend to look at investment. The word for them is to invest with the goal of a return. That would be the traditional investor. The traditional investor normally provides very low impact to the companies they invest, to the community around them, to the society around them. They want to put money, make that money grow, and take it back. Nothing wrong with that. But if you look at the other side of the spectrum, the philanthropic organizations, it's different. They are not interested in returns. They're interested in doing good. They're interested in sharing their wealth with other less privileged, or even entrepreneurs that deserve a chance to grow. So an impact investor is not on neither side. An impact investor is right here in the middle, where they do have an impact and they do have returns, but it's not a high return. They should understand that. But that doesn't mean that there's not an opportunity to make money. There's an opportunity to do business. And I'll show you along the way a couple examples. I brought actually a short video. So what is then impact investing? I mean, I mentioned here, right, try to put my arms around it. It's a way that we have to refer to investments we make in small companies, in small enterprises. I tend to call them SMEs. Micro is small, medium-sized enterprises. Well, man, if it's small and medium, how can it be micro? Because right there starts the confusion. What we see as a small enterprise in the developed world, I tend to call it advancing or an emerging market, is different from frontiers. As Professor Alves said, I spent a month in Africa last July interviewing 26 of them. 29 of them talked to me provide me information about them via surveys. But the size were very small, most of them 20, 25 workers in a team, right? And the idea there is what we want to do as impact investors is to benefit these companies, to benefit societies, to make these enterprises sustainable so that eventually when you leave, they continue to move. So that's also is an idea that is interesting because impact investors, they should think about an exit strategy from the get-go, from the beginning. Now, is it worth it? How big is it? It's very big. You see here, this is 2014 data. I'll give you more up-to-date data later on. It's $60 billion in asset management. There are fund companies, hedge fund companies out there specialized only on frontier markets. They specialize only on these specialty investments. In other words, impact investments. Now, there are a lot of graphics out there. Like I said, this is a teaser. This is just to put it on a radar screen. If you already don't have it, please, you have my business card, you have my email address there. I have a lot of information on this topic that I can share with you. But what I would like to bring to you is that erroneously, we don't hear much about it. You know, the mainstream, news venues that don't talk much about impact investment. A lot, like I said, has to do with risks, right? And true, people misunderstand. What you see here, philanthropy, it's not impact investment. Do you have money? Do you want to help the poor? Do you want to help the less privileged? Okay, donate. Give the money. It's not impact investment. By the same token, it's not Wall Street, right? It's not a stock exchange. You're not there to make millions, go IPO and buy a $100 million yacht. Right? It's right in the middle here. It's where you have a very thematic investing strategy. You may decide that you want to focus on green energies and you want to help a particular region of the world. I'm picking Africa because that's what I'm concentrating on, but you see East European countries, there are a lot of frontiers. You see Caribbean countries, and you want to invest on green, or you want to invest on transportation, which a lot of impact investors are doing these days. Right? It can be theme, or it can be more sustainable investment. I will mention to you a few companies that do that. They focus on a certain industry and make that industry more sustainable by empowering enterprises in that area. It could be socially responsible, through education, through healthcare. So there are different ways for us to do that. Now, is that money flowing into this sector of investments, of financial markets? You bet. Actually, is on the trillions of dollars. So that's a lot of money out there being injected in these, I call it industries or markets. We just don't know much. Now, of course, the definition of impact will depend on who you are. Will depend on what you care. I talk with a lot of companies that cares about healthcare in the emerging markets, in the frontier markets. Right? Others decide to invest in public transportation infrastructure. So this is some of the examples that I just pointed out to you because these are opportunities. Also, you will have to, if you are an investor or if you want to manage funds or if you want to educate the markets out there about these opportunities, you need to understand the impact investment has in these areas and the amount of risk it takes. So some investors, some sovereign funds don't like to take much risk or can't afford to take much risk. So you got to go to a more conservative approach to it. We can talk about all these. Normally when I am in a management consulting hat, we talk about these many facets of investment. I'm not an investment advisor by no means. I'm here looking into processes. I'm here looking into the management aspect of it. I'm here looking into the entry mode into different markets. I'm here looking into matching potential opportunities with potential investors. That's my role. I'm not into the money-making part of it. I don't mind that, but I'm not into the money-making, right? So trillions, I say, yes, a lot. So look at WRI, or the World Resource Institute. They actually wrote a report with that title, $1 trillion question. They realized that by 2050, the transportation industry will grow tremendously. The fleet will double. So we're talking about buses. We're talking about taxis. We're talking about, gondolas that a lot of countries are beginning to use as a way of moving citizens around, right? Fares. So it may not be in your radar screen. This is a different kind of investment, a larger amount of investment, but there is a lot of money in the market. There is a lot of opportunity in the market. So when you look at opportunities, you just need to look into frontier markets, and you will find several opportunities. I spoke with companies that are in the B2C, B2B, and doing a tremendous job and growing tremendously in Mozambique. In Angola. And they would benefit from injection. One of the companies that I was interviewing, almost 1.5 hours talking to them, they are on the round B of financing. But what happened is round B financing in Angola, it's a lot different than in Hong Kong. A lot different. You don't have the expertise. People look at it with skepticism. Round A and seed money, this particular gentleman, entrepreneur, he had to go to Spain to attract investors. Now, he was fortunate to do that. An educated person abroad came back to Angola. He was fortunate, but there are a lot of companies that I talked to there on medical diagnostics. I'm going to show one here, Centrovita. That is a similar project in Ethiopia that I will show you a video that has been funded by Norfund. Is doing very well. So the opportunities are many. They are vast. And actually what I see out there often is what I put here. We tend to be looking at a small little plant, and we're missing this massive forest of opportunities, right? We look, oh, but that country, oh, but that company. There are several opportunities out there. But look at this. What I find more shocking is that millenniums, and I think Jonas is a representative of the millenniums, right? They are interested in investing, but they want to invest with their morals. They want to invest with what they think is ethical. They want to invest and being able to say, wow, I left a mark in that country, in that company. That company, look at them today. I had something to do with that. I'm not so interested in going out there making millions and billions of dollars and going crazy, right? Females, women also are very interested on that. Again, that's Jonas, right? Are very interested on that, right? So look at this. This is not me. This is Morgan Stanley saying that. They know that. But yet, when you look at the advisors, and I'm sure Deloitte is not one of them because they are here today, but when you look at the advisors, they are not. They think that, no, that's no money there. Why am I going to do that? It's too much work. But that's not true. And you know how the saying goes, right? If you don't meet the expectations will be met elsewhere by somebody else, right? So, okay, impact investing. How does it work? It varies who you talk to. One thing I'll show you, since I'm talking about Africa. Look at this, South Africa alone, $4.9 billion invested. And I'm talking about impact investing only. I'm not talking about Wall Street money. I'm not talking about traditional investment, right? But you still have another 7 billion and growing up to 9 billion, in many other regions, including Angola, as I mentioned before, Mozambique as well. In some of these countries, a lot more than others. Look at Zambia, for example, right? There are lots of opportunities out there. What we need is to realize it and figure out how we do it. Models are many. I'm not, again, trying to sell you what I think is a good way to treat impact investment, but you got to identify the opportunity. Of course, any investment you will do a due diligence. And of course, then you got to figure out how are you going to invest. Normally, it's a time phase with trenches, right? So you want some requirements. You don't want to expose yourself completely. You want a couple other partners to come in with you. Then, in impact investment, more so than a traditional investment, it requires you an active ownership. Or at least I would say you need to remain active. You don't put the money and you call every 3 months to see how the company is doing. You don't introduce them to some smart people to be part of the board, and you keep on checking, and if they don't meet those targets, you withdraw. You invest yourself. You put professionals there to run the company with those that you decide to invest with. It's an active ownership. And of course, you need to have an exit strategy. What do I mean by identification? It's an yin, right? Strong investment performance, of course, you're still an investor. It's not that you're donating money, then you're a philanthropist. You're still an investor. But you are leaving marks, positive marks. And that's good. That's good because your name goes around. That's good because people now see that you're not a predator. You like money, you like investment, there's nothing wrong with that. The problem with investors is that sometimes they get greedy and they forget about the impact they make in the world. That's why most small business fear bankers, because of that, right? So identification is important. Project screening. What do you want? Would you invest in a B2B or B2C company? It may not be your thing. You may not understand it. Maybe you want to invest on a tomato farm, which was one of the people I talked to. Feed the people, right? So partners, who would be ideally part of that package? So you're not investing in alone. You want partners. You're telling that company, look, I'm willing to put the money, but can you find a partner? Can you find a partner that will fulfill this weakness that you have in your governance? That will fulfill this weakness that you have in your sales and marketing? I will help you to get the team together, because that's what they lack the most, the technical knowledge to move it forward, right? Consultants can help, but we can't carry the company, right? It would get expensive. And of course, a preliminary approval. It's doable, it's feasible, but you're not ready to invest. The next step then will be to do the due diligence. Are the numbers real? Are the skill set that being portrayed in the resumes real? Is the market real? Can you corroborate that? Is the government in line with it? Or they're trying to do something that is against governance, local governance? Where you have more impact, that may be a good idea, but may not be of good impact, right? So we need to look at all these areas that normally you would look anyways as part of your due diligence, even if you were a traditional investor, even if you were buying a car or building a house, right? So you need to do your due diligence, and only then you start thinking about investment. Notice that most impact investors, they don't put all the money, as I mentioned before. Most of the time, what I see out there, it's 5 to 10 million, and for about a 5 to 8 years horizon. It's built on the strategy. So I'm giving you the money, say, look, I'm going to stick with you for 5 years, for 8 years, for whatever, and then I will sell my shares, I'll take my money back, plus 5% or so, and go help somebody else. That's the plan. So the entrepreneur and those part of the package knows that within a certain amount of time, that major investor will walk away with his original money. That is that understanding. So everything that we do is so that you can have that exit strategy. Now, exit strategies are not written in stone. You may decide to stay a little longer because now you tap into another market. I'm going to show you the example here of a diagnosis company in Ethiopia that could attend only 33 patients a day because they didn't have money and nobody could lend them money. So then they found an impact investor that put $10 million there. They start then, now they attend 600 a day. and they are now expanding into 5 or 6 other countries in the region, the northern east side of Africa. So this is a big pie that you have 5%. It can be very profitable, and it doesn't have the volatility that we see in the traditional markets because there's a lot of market manipulation. Here is grassroots. You're working with the company. You know what's going on. You should know because you're an active monitoring it, being part of it. So that's where you will then decide how to invest. How are you going to apply your active ownership? Will you be part of it? What you want, as I mentioned earlier, is that you want to make sure that you optimize in these 3 areas of competitive advantage, social impact, and environmental impact. In this case here, when I say environmental, it's not necessarily, green projects, but where you want to achieve a result, to be health, be it sustainability of the particular industry. You want to be in that middle, and you need to find a strategy to do that. What I'm trying to drive home here is an impact investment. The early stage is very important. Understanding the strategy is very important, as opposed to the traditional form of investment that you think on the return on investment, you think on past quarters, you think on projection of growth of a particular industry, and you think on how to capitalize on that, right? The exit strategy is not always that clear. For this kind of investment, you should try to make sure you have some clarity because it's risky. You still have to try to minimize risk at all possible. Make sure that you do your post-exit analysis because it's one company today, 4 years from now it's another company and it grows, right? So you need to learn and be able to reinvest with efficiency. Now, for us here, some MBA students, I wish we could have done that with more notice, right? So again, as I am, we're like, oh, well, we don't have much time to put this together. But hopefully we'll have another opportunity and have this room packed or somewhere else because I think MBA students have a major role in this. And of course, it's not me, I'm not creating anything new. When you think about getting involved, some of you probably have heard of the MINT program. It's the MBA Impact Investing Network and Training. I was talking to the dean yesterday and today, we've been too busy to sit down. But I think there is an opportunity for us here in Macau with the university to create an Asian version, an East version of MINT. MINT, it's a partnership between Bridge, which is a fund company, it's a capital investment company, and Wharton, the School of Management at UPenn, University of Pennsylvania. They collaborate, and what they do is they find MBA students that submit case studies of companies that they think should be invested on, and then every year they have a competition. They bring students from all over the world, and Bridge, along with its investors, award prizes, award money for these companies, for these students, to help these companies as impact investors to grow. The return on investment is huge for the students because they have an opportunity to use what they are learning in the MBAs to do due diligences while they are still in school. Normally, actually, what happened is London Business School last year took second place. Then Seattle took first place. So what happened is throughout the year, there is a competition inside the school among MBA students with companies they identified out there in frontier markets and they think they can, they should invest on. What they're doing is a due diligence. They identify the first two steps that I mentioned. They identify the opportunity and they do a due diligence. Then they go to the United States and they present it. Here's the company I picked. Here's the company we think. Here's how we did our due diligence. Here's why we think it's going to be successful. And they compete with other companies, other students out there. And the best students, the first prize, it wins $50,000, and the second one, $25,000. Not for them to help the company to raise round A, what actually I call seed money. So that $25,000 here, you don't do much. But you take $25,000 in certain parts of India, or in Mozambique, or in Angola, or some of those countries in Africa, that's a lot of money. to help them attract investors for their seed money. So normally what Mint organizes asks, okay, take that $25,000 or that $50,000, and if you, with that company that you identify there, can raise $500,000, then they earn that money or more. And they are part of that project. They are part of that company. And if that company grows, like the one I just mentioned, you're doing 33 diagnostics, and now you're doing 600, and now you're going to 5, 6, 7 countries, not only they may have a job with that company, but they have a great story to tell. And that's what's going on out there. Mint works with several schools out there in the world. I think students from around the world should be part of these competitions, should attend the event, learn with them. But I tend to say a lot, there's a culture in the West that's different than the East. And I think partnering the schools could come up with a project like this. I think it would differentiate the schools from others, and I think will give a very practical, very experiential note to the MBA programs. So as I mentioned, Bridge Impact, it's part of the Bridge Fund Management. I wanted to put the information here. You can get more information at their website. I can make this presentation available to you all after today. Get involved. If you're an MBA student, get involved. Talk to your department head. Attend these events if you can. The Bridge Fund Manager, as I mentioned, they are managing a lot of money. $1 billion. That's a lot of money for impact investing alone. I'm talking about one organization. But why is it off the radar screen? Why don't we hear so much about it? Right? I mean, in my research, Professor Alves mentioned, I just presented last week, I come to realize that very few investors or people in general know about these frontier markets. They're kind of off the radar. The good thing is, I teach a class at Boston University that talks about that. I took the time to compare market volatility in advanced economies, emerging markets, and frontier. There's very little volatility in the frontier markets. Frontier markets are underpriced. So there's a great opportunity there. But what happened? I tried, through my broker, some of you may know Fidelity Investments, to buy some shares of a drugstore in South Africa. They didn't let me. I said, but it's my money. I couldn't. The only way was to open an account in Singapore and buy it. And it wasn't even over the counter. So there is a lot of opportunity because people are not paying attention. Eventually they will. And the early stage investors will reap the benefits. Wortham, I don't have to talk much about Wortham, but I thought was a good opportunity to at least tell you where you can find more information about social impact. Wortham is a great school. You probably, Marco Yusen used to be the chair of Wortham Business School. He wrote this book about leading up, and that's what it's all about. We gotta lead our executives. We MBA students, why not take that drive that you have and put it to work? So I mentioned a little bit about the 2017 Mint competition. So I already kind of told you the NSAID took the prize. They are working with an Indian company in the healthcare. So if they can, they got $50,000 to LiquidNet and Wells Family Foundation. If they can raise, the $500,000 seed money, so they get awarded that prize, right? The idea is due diligence. And what's better? What can be better in any class, MBA class? They say, okay guys, you start your MBA, here's a project you're gonna work throughout your program. And we'll test you along the way. And the goal is, hopefully, 1 or 2 or 3 of you here will represent, whatever university it is, us at Mint. Or we create our own, right? This should fire up any student. I'll leave you with this one little case, okay, about this Ethiopian company, the Nor Fund, the Norwegian fund. Is a sovereign fund from the Norwegian government that works only with impact investment in certain parts of the world. They do not invest more than 10 million. It's between 5 to 10 million, and they don't stay more than 10 years.
Ethiopia has long been considered one of the world's poorest nations. However, in the last decade, Ethiopia has seen impressive economic growth of between 8 to 10%. Small to medium-sized enterprises are crucial to Ethiopia's economic growth.
ICL is a diagnostic testing facility serving since 2004. It serves pretty much all of the regions within the country. We serve close to about 600 patients a day.
Good business ideas need investment to grow. SMEs in emerging markets often suffer from insufficient access to financing.
There's absolutely no credit or financing available for healthcare institutions within Ethiopia. I did not have any access to grow the business and take it to the next step. And that's where Ascent Rift Valley Fund came into the picture.
Providing access to capital can empower businesses to overcome the obstacles to grow and deliver better services for consumers. Norfund, the Norwegian Development Finance Institution, aims to assist businesses like ICL, among others, through SME investment funds. In 2013, Norfund committed an investment of $10 million to Ascent.
Ascent Capital is a growth capital fund, so we look for investments in companies which have done very well in their own country and have the potential to expand regionally, much like ICL International Clinical Laboratories, which is our first investment here in Ethiopia.
We began our operation in 2004 with 30 employees and barely covering about 30 patients a day to about 180 employees currently and about 600 patients a day. ICL became the first federally licensed institution that gave us permission basically to serve throughout the country. Patients don't have to travel to Addis, and we collect the patients, the samples, and we transport the samples to Addis. And using our own computer network, they get the results in a timely fashion. So we believe we've made a huge impact on a lot of patients' lives throughout Ethiopia.
With the help of ICL, a lot of investigations that were to be done in Addis were minimized, and we can just send the investigations in Addis and get the results within 24 hours. And so we are able to diagnose and treat the patients based on the lab results we get from the ICL. We are helping a lot of poor people so that they are not expected to go a lot of distance and spend a lot of money.
Investment in promising SMEs leverages businesses to catalyze socio-economic growth. When implemented sustainably, such investment can also produce significant returns.
We hope to grow within the next year and a half to the neighboring countries, Kenya, Uganda, Tanzania, and South Sudan. And we'll continue to grow within Ethiopia since that is one of our major objectives. We have a very good and close working relationship with Ascent. With their help that we hope that we'll be able to achieve what we really set out to achieve.
So I'll stop here. I just want to give you some glimpse of the opportunity. I would like to pass the baton to Yanis, and then we can have some Q&A. So